You're watching Daybreak Asia, coming to you live from Sydney and Hong Kong. We're counting down to the Open in Seoul.
Australia has just come online. The top stories this hour. Investors cautiously assessing the interest rates outlook after a pickup in US jobs growth and wage gains. Focus now shifting to inflation reports from the US, Japan and China. The grounding of Boeing 737 MAX 9s goes global as the Alaska Airlines mid-flight blowout puts the company's comeback plan in jeopardy. And a Bloomberg scoop. US intelligence revealing widespread corruption is behind President Xi's sweeping surge or purge of China's military.
Such a great story, and we'll get you more details in just a moment. But take a look at the Open, as Belle kind of alluded to. It could be pretty choppy and a bit sort of thin on the ground in terms of liquidity, Brad, because we do have Japan closed for the coming of age holiday today, so we won't have Japanese markets trading. This is a picture as we get into the start of trading here in Australia. Of course, that staggered open, not much of a change at the moment. We are really watching for potentially some plays when it comes to the next leg of trading for the Aussie dollar, though, because we have seen that inflation test kind of being posed as we get one of the many readings. We've got, of course, US inflation, but also inflation gauges out of Australia as well. So that late 2023 rally when it comes to the Aussie dollar could be seeing quite a significant new hurdle this week. That inflation data expected to really strengthen the case for the RBA to put through earlier rate cuts. That's a jump of about 10% against the greenback through from last October. But the picture when it comes to broader equities around the region, steady open, focus really shifting this week. I mentioned US CPI already, but of course we're also getting inflation reads out of Japan, PPI and CPI out of China as well. That's not expected to be good news. And of course that Friday session with the mixed jobs and activity data seeing a pretty mixed session. We're seeing dollar yen trading pretty steady at that 144 level. And of course FTSE A50 China futures actually just kind of holding steady at this point, Belle. But of course it is a big week when it comes to some more of the eco counterpoints to China that suggest that we could see further weakness still, and potentially more needs to be done by policymakers there.
Yeah, certainly a lot of different traders are really guiding for further stimulus and supportive measures from the PBOC in China. But the direction for stocks in the US, well, we're just getting some futures coming online here. Again, fairly steady in the early moments here. Yes, a little bit of green, but mostly you've got to put it in perspective here because we actually had the worst week for US stocks since late October, really down to these changing expectations around where the Fed goes next. And you mentioned the US inflation print. That's why it's going to be so pivotal in these coming days. Jobs, as you said, strong at the headline level, but cracks certainly forming beneath the surface here. Watching Treasury bond futures, again, fairly steady so far, but we did see that slump resuming in the Friday session, notching a weekly slide as well. We do have all of the yield curve now trending above 4%. Oil markets, to note, we do have Brent crude or WTI, both of these coming online here. A little bit of weakness coming through, but we have seen Saudi Arabia cutting key prices or crude prices for buys in all regions, including in Asia. But persistent weakness, that's really the trend that is developing here, even though there is a seasonality factor to it. But global oil supply has been strong, so telling us perhaps OPEC Plus will need to extend those output cuts. Let's shift now to what's been really a very developing and top story over the weekend. Airlines worldwide have begun grounding Boeing's 737 MAX 9. That's after a section of fuselage on a brand new Alaska Airlines jet blew out during a flight on Friday. It's the most serious in a string of recent quality lapses, putting the plane maker's 2024 comeback plan in question. Joining us now is our Asia Transport reporter, Danny Lee. So, Danny, just talk us through it because, yeah, we know the investigations in the early hours, a lot of different intel is sort of coming out on this, but how are airlines and regulators reacting to what happened on Friday?
Yeah, a difficult weekend for Boeing, Alaska Airlines and the 177 passengers on board and the crew on board Flight 1282. For Alaska Airlines, they're the second biggest operator of the MAX 9. They grounded all 65 of their jets, and that was followed by Alaska Airlines, United Airlines rather, which is the biggest operator, and then that followed another round of airlines who followed suit, such as Aeromexico, Panama's Copper Airlines and Turkish Airlines, but there is a limited number of airlines overall who operate this type of jet. Now, they'll all be waiting for the US Federal Aviation Administration to see what steps that they may need to take to make checks to this plane that are satisfactory to the FAA, and also potentially what remedies that may need to be put in place before this plane returns to service. But it does take us on to the regulators who the FAA actually put out a statement only a couple of hours ago, and they said that they will keep this plane, the 737 MAX 9, grounded until they are satisfied it is safe to fly. So we may feel more like a long and drawn out grounding here potentially in the near term. But for the FAA, they did take action. 171 of 215 MAX 9 jets they instructed to be grounded worldwide, and that was followed by the UK and the EU, who said they would follow the FAA's directive here, but they don't have any aircraft in the region that are affected. Then you also had India following suit, but they also don't have aircraft affected. We also then had China under a Bloomberg scoop. We heard, were holding an emergency meeting on Saturday, but nothing has come of it so far, them taking action they were considering. But we'll be watching closely, especially on Monday, if anything does happen.
The question is, how many more of these bad headlines can Boeing take, right? They're just 5 days into this kind of new year, new comeback plan. When are customers going to start wavering on their confidence in these aircrafts?
No doubt this is a big reputational hit to Boeing yet again, not least for after the 2019 global grounding of the 737 MAX fleet worldwide, and that came after 2 fatal crashes. But in the recent months, we have seen serious manufacturing and quality lapses, not just on the part of Boeing, but principally responsible Spirit Aerosystems. They are the main supplier to Boeing on this MAX jet. We've not heard from Spirit actually over the weekend since the incident took place, so we'll be also watching to see if Spirit has anything to say on Monday. But for Boeing, it's hard to know what kind of financial impact there might be in the near term. But for the airlines, no doubt they'll be seeking some financial remedies because of the grounding that has taken place and the huge impact to schedules and to passengers that airlines will need to recoup from. Now, looking at the current investigation, it has only been going on for the last several hours. In fact, it only started in the US on Sunday. The NTSB, the National Transportation Safety Board Chair Jennifer Homendy, said on actually Saturday night that it was more fortunate that this was not a more serious tragedy. They'll be looking, though, for the manufacturing quality that goes into this aircraft. They'll be also looking at all kinds of things, such as the pressurization setup for this aircraft and how the components around the door look after this blowout that took place on Friday night. But we'll be watching closely just to see what happens and the days to come and more on what happens here.
Our Asia transport reporter Danny Lee there. Well, Bloomberg's been told that Chinese President Xi Jinping's sweeping military purge has come as a response to widespread corruption that's undermining his efforts to modernise the armed forces. Let's get the details now from our Asia government and economy correspondent Rebecca Chung-Wilkins. Such a delight to have you here in Sydney and on this incredible Bloomberg scoop, right? When this was playing out last year, I think we were wondering, like, what's going on? Why are we seeing these individuals being purged from the rocket force, for example? And now we have a pretty good idea.
Absolutely, and it's such a sort of notoriously opaque part of the Chinese establishment. So really some extraordinary reporting here from my colleagues in DC, essentially pointing to these deep flaws in the rocket force and in China's military preparedness, specifically when it comes to missiles. And US intelligence, these sources telling us that that is what's behind this really sweeping purge that we've seen. Just in terms of the known figures, at least 15 people from the defense establishment have been purged in recent months. Now, some of the extraordinary sort of insights that we got in this story include things like missiles being filled with water instead of fuel, as well as sort of hundreds of these missiles that are situated in Western China actually not having lids that essentially allow these missiles to even be fired at all. And so this does go, we think, some way to explain why we're seeing this really sort of radical revamp, which includes this unprecedented removal, at least in the modern era, of these 2 members of the Politburo late last year, Li Shangfu on the defense side and Foreign Minister Qin Gang.
Rebecca, given the extent of that corruption that you just detailed there, how does this put us in terms of Xi and China overall perhaps contemplating major military action in the coming years? Is this a setback in terms of that timeline, if at all?
Well, in the view of the US, certainly this does seem to be a setback, and that is part of how they're rationalizing why it is that Xi Jinping has come down so swiftly and so hard on these very, very senior figures that, presumably one would have thought would have been very closely vetted before being sort of, raised into the ascendancies. What's notable about this purge is that some of these figures that have now been removed were actually elevated by Xi or by very senior figures within the Chinese establishment themselves. China, for its part, continues to affirm that it is inevitable that it will reunify in its own language, for example, with Taiwan, which is, of course, a democratically run island that is about to see its own elections. But that issue of the flashpoint of Taiwan and China's sort of military preparedness for potential conflict with Taiwan is really front of mind here when we think about this story.
Yeah, and that's the question, right? Does it kind of change the picture going into Saturday's vote a little bit in terms of the pressure on these cross-strait relations? Because we do have at the same time, 5 US defense firms being sanctioned for these arms sales to Taipei.
Yeah, certainly. I mean, China certainly has long felt sort of quite vocal about pushing back against US support, or has it perceived US support of Taiwan. So the sanction of these 5 firms, it's largely likely to be symbolic in nature, would be my expectation, because these US defense firms don't really operate in China in a practical way. And so largely sort of symbolic, but certainly important sort of part of the narrative. And for many Taiwanese, of course, the threat of China and this reality of having long lived in the shadow of mainland China is what is informing their decisions as they go into the elections.
Of course, taking place on Saturday. Bloomberg's Asia government and economy correspondent Rebecca Chong-Wilkins here in Sydney with some of our top stories, and of course staying on those elections. That vote is set to go underway on Saturday next weekend. This is the vote for the new president. Stay tuned to Bloomberg TV all week. We have live updates ahead of that high-stakes ballot, and of course on Monday for the full coverage of those results. Well, US Secretary of State Antony Blinken warned that the Israel-Hamas war could easily spill over to a full-blown regional conflict. The comments come as Blinken travels across the Middle East in an attempt to calm tensions and urge Israel to do more to protect civilians in Gaza. For more, let's bring in Bloomberg's Vonnie Quinn. And Vonnie, I think this is Secretary Blinken's 4th major trip since October 7, when the attack happened. What is he hoping to achieve? It's a pretty protracted, difficult situation.
Yeah, I mean, bottom line is preventing outright war. I think that's the initiative that's being taken here, Heidi, and broader initiatives would include sort of calming tensions in the region, trying to find out what might be a solution post the war for Gaza. And we know that, nobody is on the same page on that at the moment. So there are broader questions, but this is a very, very widespread tour. He landed in Doha on Saturday and Sunday, but before that he had spoken to the Jordanian king, and also he had been to Turkey and Greece. After Doha, he was headed to the United Arab Emirates, followed by stops in Saudi Arabia, Israel, the West Bank, and Egypt. So really trying to talk to as many of the parties around the region as possible, because we know Qatar has been helpful with the hostage situation. Qatar helped broker the release of more than 100 Israeli hostages. Qatar, though, giving a news conference, their Prime Minister Sheikh Al-Thani calling for a broader ceasefire that would end the violence. Now, that's not going to happen. Israel and the United States don't agree to that. They argue that that would allow Hamas and perhaps other actors to launch attacks similar to the one from October 7th, for example. But at that same news conference event, there were separate news conferences, but the US Secretary of State said this, and I'm quoting, "This is a moment of profound tension in the region. This is a conflict that could easily metastasize, causing even more insecurity and even more suffering." This, as we're seeing a lot more insecurity, particularly at the south of the border between Lebanon and Israel. We're seeing constant rockets, and this in retaliation at the moment, at least, for what Hamas says was an attack and a killing of one of Hamas's senior officials by Israel. But again, those attacks, those rocket attacks, continue over the border to Israel. Just in the last hour, the AP reporting that the Israel army has said that Hezbollah has struck an air control tower. It didn't hurt anybody, but that was the latest attack. And Israel does not want this to continue and wants its residents to be able to return to the north of the country that borders Lebanon.
And there are the attacks, of course, in the Red Sea that are coming off the back of those events in Israel and Gaza as well. What sort of conversations is Blinken likely to be having with counterparts in the region about some of those high-stakes decisions of what to do with the sea strikes from Houthi militants?
Exactly, Annabelle. Another very, very difficult situation which could turn into a conflagration at any time. And something needs to be done now because the US and its allies on this particular topic have warned that something will happen if the Houthi rebels do not stop. And the Houthi rebels have said they will not stop. They're, of course, as we know, backed by Iran. So there are several potential opportunities here. The US may try to rely on diplomacy. We know that President Biden's special envoy for Yemen will travel to the region to join Antony Blinken, the Secretary of State, next week. That would be the best and easiest option. If that doesn't work, well, there's the potential for targeted strikes, degrading the Houthis' ability to perhaps fire at ships. There is the potential for a major offensive, which many in the military say might be necessary, designating the Houthis again as terrorists, for example, or targeting their finances. And then there's an interesting one, appeasement. So you could offer financial incentives for a permanent ceasefire. That would have to be overseen by the United Nations, but a decision will come very soon.
That was Vonnie Quinn there, Vonnie in New York. Still ahead, Japanese Prime Minister Fumio Kishida hit by yet another blow after a ruling party lawmaker is arrested over a widening slush fund scandal. Plus, Tribeca Investment Partners tells us why they're taking a cautious approach as we head into 2024. That's next, and this is Bloomberg. You're watching Daybreak Asia. Let's take a look at the week ahead now, and we're due to get US inflation numbers for December on Thursday. CPI excluding food and fuel, which is the Fed's preferred measure, is expected to have receded further year on year as 2023 drew to a close. We'll also be watching for CPI prints from Tokyo, Australia, China and India. Also on Thursday, watch the Bank of Korea's rate decision. Bloomberg Economics expects the central bank to keep its hawkish holding pattern amid concerns about private sector debt posing a risk to financial stability. Other economic data to note are trade figures from Australia and China and industrial production numbers from India. We'll also be on watch for earnings from major companies in Asia, such as Samsung, which is set to benefit from AI chip demand this year. Other firms due to report include Wipro, Infosys and HCL Tech. And so, Heidi, that is your week ahead.
It is a big week indeed, Bill. Let's bring in Jim Bailey, who's the portfolio manager at Tribeca Investment Partners. So, you know, we start off the year obviously with the same kind of musings and themes as we ended last year, and primarily it's about what the Fed is going to do and how that potentially impacts market expectations. Is it sort of a steady as she goes year, do you think? Where do you see the opportunities falling?
Look, absolutely. So look, we actually think there will be volatility this year, but we have become very bullish across the equity market. Clearly, we had a very strong December, but just the fundamentals for this current calendar year is looking pretty strong. You know, we have quite enough time for the corporates to pricing in, you know, work with the high costs and passing prices and the like, and working with the weakening demand. We're seeing that analyst expectations are reasonable and valuations for some sectors reasonable, and also above all that we think the interest rate cycle is is in a good place compared to where we were 12 months ago. So all of that together is pretty positive for the equity market. But clearly, you know, we will see a reporting season, so we will see weakening earnings. But a lot of that should be well expected by analysts.
Where do you see the, if not cheap, but where reasonable valuations for the gain?
Yeah, absolutely. So look, I think across the market, clearly some of the growth names have rallied very aggressively. The tech sectors are looking very expensive, and the opportunity lies where, you know, the company's earnings have been impacted by the slowing demand, by the high costs, and next 12 months will be a better place. These will be the likes of the cyclical companies. We're naming retail. It is going to be earning clearly is going to be tough for the upcoming February reporting season. But consumer is reducing spending slowly, not a collapse as we have previously expected. I think they will be able to cope with a better environment ahead. But the earnings is going to reduce. But I think the expectation is reasonable enough. Valuation is cheap enough. And if anything, some of the if we're talking about Australian market, some of the retailers actually have some tailwind to come in the next 12 months. Perhaps not first part of the year, but second part of the year. Look across other sectors. We like commodities. We think that China is finally turning the corner slowly, but I think it is coming. Next 12 months, they will drive much needed growth for that space. We're seeing some of the commodity prices already rally quite aggressively, but I think
perhaps unreasonably so when you take a look at iron ore.
That's right. Yeah, that's right. That's quite incredible. So we think that price is going to hold reasonably, just given the supply demand dynamic and the inventory level over there. So perhaps it will weakening towards the end of the year, but that is a commodity really outperform everything else. We're seeing that there's a lot of opportunity if you go further down the track where they have yet to respond to a sort of growing China.
Growing China or sort of lower growth for longer China sort of scenario?
Yeah, look, I think it is a growing China. The growth will slow down, but this year is not going to be the year that's have anemic growth because they are recovering from what it was a very prolonged period of slowdown and recovery. So we think this year is going to be a year they will gather pace, but perhaps over the long term we do have to see some of those structural indicators come through. It is too early to call.
What do you like in China then?
Look, I think in China we do prefer more consumer-facing as well as the likes of travel and restaurants and the like. I think this upcoming Chinese New Year is going to bring quite a lot of consumptions around. In the previous travel periods, peak travel period a few months ago, things are still pretty robust. So even though consumer is very cautious with what they're spending on, I think with the coming period things will look a bit better.
We know that President Xi wants the new growth drivers to come from things like EVs, batteries, renewables. Is that space interesting?
Look, absolutely. I think this space is, they always say that when you invest in China, you do need to follow the policy drive. But a lot of that is, you need to look down the supply chain where, whether they do have the commodity, whether they need to outsource. And also some of the EV makers are within China. So you do need to look into that whole raft of the next 5 years. We do think there's a lot of opportunity coming up in that whole EV space.
Junpei, always great to have you with us. Junpei Liu is a portfolio manager at Tribeca Investment Partners. We do have much more to come here on Daybreak Asia. This is Bloomberg.
Getting a quick check on how bonds are trading in the Antipodeans so far this morning. Aussie and Kiwi notes, just those yields you can see here trending to the upside. What is really driving that is what happened in the US session on Friday. Very whipsaw trading coming through for treasuries, but it was that all-important reaction to the jobs report. So very strong on the headline print, but there were those signals of cracks that emerged through, and you've got all of the treasury curve now trading above the 4% mark. JP Morgan strategists as well to note this one pretty well read this morning on the terminal, but they do expect that Treasury's rally to resume after what they're calling a rest. But they're looking for 10-year note weakness in the early weeks of the year to find support at the 4.25 to 4.3%. Coming up in the next hour, we'll have Saudi Arabia cutting oil prices amid persistent weakness in the market.
The jobs report was absolutely hotter across the board.
It's a solid report.
The labor market is still quite strong.
Of course, we're concerned about what does this mean for the Fed.
This reinforces the notion that the Fed's not going to be in a rush to cut rates.
Certainly, taking back rate cuts is a relatively easy call.
Very initial interpretation is, well, that likely means that the Fed does not actually cut rates, but I think that's a premature conclusion.
I'm actually still expecting a 50 basis point cut in March.
Easing going to
happen in March? I don't think so.
I think it's really clear that the Fed is going to be waiting a while before it starts cutting rates.
I think they'll start cutting in May, June.
I think you're looking at the back end of the year for that.
That was Bloomberg TV's guest weighing in on the latest U.S. jobs data and its implications for Fed policy. Very interesting action in the U.S. session on Friday following that jobs report, because very much whipsaw trading, a lot of focus coming down to the headline level. It was a pretty robust reading for that U.S. jobs print that came through. But the sentiment sort of shifted in the session as investors really started to think about and look at those more micro signs as well. Things like people that are looking for jobs are taking longer to find employment. More people are also taking on work for economic reasons as well. So a lot of traders ending the day perhaps thinking that the Fed is likely to keep with its dovish tilt in the upcoming meetings. Of course, really key to that is going to be the US inflation print later this week, and it could show further signs of price pressures easing. Again, it's something that the Fed really wants to see here. But the stocks reaction so far, well, we had US stocks capping their worst week since October of last year. Futures fairly steady so far, as we're seeing trading really for the Antipodeans so far in the session, and continuing to watch that Japanese yen. They're trading close to that 145 mark. It has really been that rate differential between the Fed and the BOJ in focus. But of course, Japan equity markets, they're shut for a public holiday today. Haidi as well, something else that could be really playing into the theme of trading so far. Pretty subdued to note.
The top geopolitical news that we're following today, Beau, US congressional leaders have announced a deal on a top-line spending level for the current fiscal year that lessens the chances of a partial government shutdown on January 20th. Senate Majority Leader Chuck Schumer and House Speaker Mike Johnson negotiated the bipartisan deal. It clears the way for committees to push through detailed spending bills now that they have a limit on the amount they can spend. Indonesia's presidential contenders sparred on policy issues from foreign debt risks to disputes in the South China Sea in the latest debate ahead of February's election. The former Jakarta governor, Anies Baswedan, accused the defence minister, Prabowo, of not doing enough on cyber defence. Prabowo, who leads some opinion polls, labelled his competitor as too theoretical. A new opinion poll suggests that most Thais expect the country's political turmoil to persist through this year. Yet a majority also see Prime Minister Srettha Thavisin staying in office. The government poll was conducted by phone in mid-December. It found almost 30% predict political discourse will get worse after last May's election, ending 10 years of military rule. Bangladeshi Prime Minister Sheikh Hasina has extended her rule after her party won Sunday's elections. As a result, she will retain her title as the world's longest-serving head of government. The Election Commission says turnout was at around 40%. That is a sharp drop from 80% participation in 2018, as voters heeded an opposition campaign to boycott the election bell.
Yeah, and turning to the outlook for energy now, because Saudi Arabia is cutting its February oil prices for buys in all regions, including its main markets in Asia. That price cut comes amid persistent weakness in the market. Let's get more with Sue Keenan now from New York. And Sue, it's just sort of another sign that we're seeing here that OPEC plus output cuts haven't really boosted prices so far.
No, they haven't. And, you know, those cuts were designed to prevent a buildup in oil supplies and storage, which has a bearish impact on price. And they've essentially failed to do that. We're seeing, by all indications, oil on track to have an oil surplus, if not glut, globally. And we saw oil prices fall for the first time in a while last year. As a result, Saudi Aramco, the state oil company, now reducing its flagship Arab Light price to Asia by $2 a barrel. That's bigger than a survey of refiners and traders by Bloomberg had indicated. These cuts are also not just confined to Saudi Aramco's biggest market. The Saudis are cutting all prices for February delivery to Northwest Europe, the Mediterranean, and North America. And this has a lot, again, to do with the thesis of oversupply of oil, a lot of it coming from the U.S. and cartel producers really producing a lot of oil. And for the most part, the market appears to have so far shrugged off concern over the Israel-Hamas war and the deepening Mideast turmoil. Check out the year charts for both West Texas Intermediate and Brent, and what you'll see is that decline for the year. We haven't really seen a pullback in price in a couple years, even though greater turmoil does remain a risk, and we've seen that risk play out just in the past week.
Meanwhile, Sue, production at Libya's largest oil field was suspended on Sunday.
Yeah, over the weekend, Libya's National Oil Corporation declaring force majeure. That's an act of God clause that a lot of oil companies will invoke when they're unable to contractually meet their obligations. They're unable to deliver oil as promised, and that's as a result of Libya's largest oil field being shut down after protesters entered the facility several days ago. The oil firm says negotiations are still ongoing, and Libya is a member of OPEC Plus. They produced about 1.2 million barrels a day for most of last year. So there is a lot of focus on how quickly Libya can get back online, because that would be a dent in supply. So the Libya outages, various turmoil in the Mideast, and the Red Sea gave a boost to oil prices in the past week, and that's been offsetting data showing supply gains. West Intermediate posted a 3% weekly gain. We're seeing that gain expand slightly in Asia trading as it gets underway. You'll see that West Texas Intermediate now trading close to 74. Brent ended the week closed to $79 a barrel. And those week's gains come despite the fact that analysts on Wall Street are starting to cut their forecast for this year. The surge in supply outside of OPEC is the main reason. Meanwhile, the Red Sea disruptions to the path of a lot of oil shippers and other container ships is something that everyone is still watching in the oil market. Maersk, the Danish shipping giant, has said it will continue to avoid the Red Sea, and the U.S. is now deciding how to react to the latest attacks from the Houthi rebels, who've been very aggressive in actually boarding ships and trying to cause turmoil there.
That was Sue Keenan in New York, and of course really playing into the direction of energy prices over the course of this year has been the demand outlook coming through from China, because actually, Heidi, it's pretty interesting to note today it's 1 year since the China-Hong Kong border reopened, so that taking place on January 8 of last year. So China essentially, as we know, kept with its COVID-0 strategy for a significantly long period of time, and only just started to gradually reopen border checkpoints with Hong Kong and Macau just 12 months ago. Hasn't really been a great 12 months since. There was so much optimism around the reopening, but you can see in that chart there, the Hang Seng is down over 20% over this period. Of course, the Hang Seng, you should note as well, is not just China facing, so it is really sensitive to the economic news and the economic health of Chinese companies. But the other part that plays into that as well is just that Fed keeping rates higher for longer, and the Hong Kong dollar, of course, the Hong Kong Monetary Authority system following what the Fed does, and it has really been caught between that weakness from China, those higher rates. But again, not a great outlook 1 year since that border reopening took place.
Yeah, and of course we haven't really seen the visitor arrivals either from mainland China really bounce back to pre-COVID levels either, right? We have instead seen the exodus of travellers going the other direction, of course, trying to, get cheaper deals and cheaper holidays going into the mainland. So as a result, you've seen kind of that chart really showing the number of tourists have seen a recovery, nowhere near that pre-COVID peak, though. Hong Kong visitor arrivals from mainland China, they're still far from seeing that full recovery. On the other hand, you have seen just that flow of visitors from Hong Kong making 8 million trips into China. So that effort by Hong Kong to try and revive the retail sector, the hospitality sector, still facing some significant headwinds. These top, nightlife spots being left deserted as Hong Kong residents are flocking across the border. We know Shenzhen is very popular as a destination for shopping, for, visiting restaurants and weekends and long weekends and the such, for cheaper options for entertainment and retail as well. 7.7 million departures and some in December from Hong Kong via land and seaports, typically used to travel to the likes of Shenzhen, but also Macau as well. That was the highest for December since those statistics started being reported in 1984. So we are just seeing still quite an uphill battle there when it comes to the recovery in Hong Kong, not to mention China as well, right? We do get that price data really expected to suggest that deflation is still the ongoing theme as we get into 2024 there. Well, lots to talk about when it comes to the economic and market outlook for China. We do have a packed lineup of guests from the UBS Greater China Conference taking place in Shanghai this week. This is the first in-person event since the pandemic. Those conversations at the times listed on your screen, we'll be speaking to Eugene Tian, who's the UBS China country head, and talk about the business prospects for that key market. Also talking across really expectations for Chinese equities, as well as some of the bigger picture issues that Bell just spoke of. Of course, we continue to watch expectations out of the Fed, some of the geopolitical concerns facing the global economy as we get into this year as well. Japan, of course, is a big outlier when it comes to where the BOJ goes, how that potentially, impacts the yen and these big changes that we've seen for the Chinese markets, the Japanese markets, I should say. Our interview with the Suntory CEO, Takeshi Inami, will be centering on how these changes in the economy is really rewriting the business approaches of Japanese corporate leaders. We know that expectations of structural change for corporate governance have really been one of the pillars driving this big rally that began last year for Japanese markets. That's coming up. This is Bloomberg.
Quick check on how the Japanese yen is trading in the early moments here. Of course, Japanese equity markets are shut on Monday, so we could see some thinner trading, but the Japanese yen holding pretty close to 145 to the greenback, coming off its worst week against the US dollar in 16 months, and it's really that economic fallout that we're continuing to see from the powerful earthquake on January 1 in the country's northwest. Of course, it does come down to that expectation around the BOJ policy as well, and the CEO of Japanese airline ANA expects the yen to stay in the range of 140 to 150 per dollar, even after the end of the BOJ's ultra-easy monetary policy. Goji Shibata spoke to us on the sidelines of a gathering of Japan's biggest business groups.
I don't expect a huge impact from the BOJ policy shift on our business directly, but if the yen is to appreciate as a result of policy change, there would be both positive and negative effects. I would expect more positive impact from outbound tourists increase and a reduction of foreign currency denominated expenses. Even when the negative interest rates policy ends, I expect the yen to stay between 140 and 150 yen to the dollar.
And of course, before the BOJ makes any sort of policy changes, they're really looking to see what are the outcomes of the wage negotiations that take place in the first quarter of this year. The Suntory CEO, Takeshi Inami, says that the salary increases we've seen so far in the country could help boost innovation in the country. Speaking with Bloomberg, Inami also thinks changes in the Japanese economy are pushing corporate leaders to be more open for M&As.
I'm sure there are so many reasons for us to believe that the industry will be more active to use cash. There are some reasons. One, we know the interest rates will go up, and we have cash. So either one who wants to borrow cash or who have a lot of cash, we need to take action. The reason behind is inflation. The inflation is gone. Our economy has so much changed, for the better, I would say. Mostly, deflation was a huge disease, but we business leaders think that deflation is gone, and plus we have to take action. The reason behind is we notice that we are lagged behind from the world. But there is a huge chance here in Japan. There is, everybody knows that we have to digitalize. We have to reform the society. A lot of changes are needed. So change is pushing us, business leaders, to do something new. So I think 24 is a big push for business leaders in this country to do something new, something different than last 30 years.
Well, the market expects the BOJ to scrap negative rates sometime this year. What does that mean for Japan Inc., where the interest rates will rise?
Two impacts. Immediate impact is the currency. Japanese yen will be more appreciated, perhaps toward the 130s, hopefully. Second thing is more important. That is, I think, consolidation of the industry or metabolism of industry. Some companies can't survive by facing the interest rate increases. But that is a good thing for our economy because that will bring dynamism to our economy. That's what we needed, and we need such dynamism.
We're now seeing actually significant changes in wages. Nomura announced 16% hike for some of its younger employees. I know Suntory last year, you said 6% increase for 2023. It sounds like you're looking at 7%. Is that correct for 2024? Can you tell us some of your strategies for increasing wages? And do you think that'll continue?
I strongly believe that nowadays, first of all, we raise wages first for our people working together. Then that will galvanize people. Then ask them to increase productivity. Used to be the opposite. We increase productivity, then we increase wages. So our idea is, first of all, people first, and raise productivity after all, going through the increases of wages, not one single year, 2, 3, 4 years. So our people think that, wow, our company will increase wages, not only 1 year, 2, 3, 4, continuously. So that will create great motivation towards innovation.
What is the most pressing issue then for Japan? What do you think is the most pressing issue Japan faces going forward?
Energy. I think we have to pursue all measures, every measure, so that we can secure energy, because we are shifting to digitalization more and more, and we are catching up with the world. AI is used everywhere. Even I use AI too. So energy is the source of, I think, economic growth. So we need more renewable energy. We need more reactors of nuclear energy. We need more wind power. We need more new technology which generates electricity. So we need every source of energy.
That was the Suntory CEO Takeshi Nanami speaking with Bloomberg's Kurumi Mori in Tokyo. And sticking with Japan, because the Prime Minister Fumio Kishida has suffered a fresh political blow with the arrest of a ruling party lawmaker in relation to a slush fund scandal. For more, we're joined by Asia Economy and Government Executive Editor Dan Tenkate. Dan, this is really just sort of a deepening of the scandal, but as well, I think it really puts perhaps a timeline, or a very small amount of time really, as to how long Kishida can continue to batter off these question marks of whether he should be resigning.
Yeah, exactly. It's, this scandal's been trickling along for a while. It seems to get worse all the time. Kishida's approval ratings are in the tank. People are just wondering how long he's going to stay on now. There's a couple theories related to that. One is that he wants to stay on before he passes the budget in a couple months' time. And the other one is that he's waiting for a state visit to the United States to meet with Biden. This is something that's been long planned and something that is very important to Japanese prime ministers in particular, given the alliance they have with the United States. So there's a feeling that that will go ahead before anything happens to him. And then the question is, who would replace him? They don't need to actually call an election right away, but there is an LDP leadership contest later in the year.
And who would be sort of emerging as the key people in this? And the other question as well is whether there's any sort of further politicians that are likely to be embroiled in this scandal.
Yeah, exactly. And I think that's the real question now, because this scandal is hitting, one of the biggest factions in the LDP. Usually the factions all kind of rotate the job of Prime Minister. Kishida himself benefited from that system, and they kind of roll through the different factions. And once one prime minister goes down, which is, a frequent occurrence in Japan, apart from several exceptions, including Shinzo Abe, who managed to stay in power for quite a long time. But since then, you've had Suga, you've had Kishida. Typically there's a cycle where they last sort of a couple years, and then the approval rating goes down. And we're seeing that cycle play out with Kishida. Some scandal emerges, like the one we're seeing. Given this one involves a hefty chunk of the LDP, it's very unclear who will emerge unscathed from that. Oftentimes, it's not the most popular, but the one who can command the support of the party.
All right. That was our Asia Economy and Government Editor, Dan Tenkate. With that, we'll have plenty more to come on Daybreak Asia. This is Bloomberg.
Some of the stocks we're watching when trade opens in Korea shortly. Keep an eye on the banks and brokers that will be investigated by regulators amid a wider crackdown on exotic notes linked to Chinese stocks. Some of these include Korea Investment and Securities, Mirai Asset Securities, Samsung Securities, NH Investment and Securities there. That market open is next. This is Bloomberg. This is Daybreak Asia. We're counting down to Asia's major market opens, and it is a holiday quiet start to the week. Bell, as of course Japan is off for the coming of age holiday, so we'll know the volumes at the start of this week will be a little bit softer, but of course it is a big week when it comes to inflation readings from the US. Of course, that core reading is going to be the key one, but also across major markets like China, like Australia, Tokyo CPI, as well as some, the first rate decision of Asia for 2024 as well, with the Bank of Korea.
Yeah, that's right. Expected to stay sort of in that holding pattern, but yes, inflation prints, that's going to be taking centre stage this week. And what policymakers want to see is still those signals that we are seeing price pressures easing. But the open here for South Korea, as you said, Japan shut today for a public holiday, so we are just monitoring the outlook for the Kospi in the early moments here. The direction for equities around the region today, it is looking a little bit weaker because of that follow through from the US session on Friday, capping out what's been the worst week for stocks since late October. So we did see weakness in the Wall Street session. That is feeding across this morning here. You can see that Kospi there just under pressure. The Korean won, meanwhile, continuing its slide against the greenback here, although fairly steady right now in the early moments, but still well past that key 1,300 mark. As you said, the Bank of Korea rate decision, the one to watch. And as we do see markets now sort of flipping into more positive territory, but again, Heidi, probably going to be a little bit range bound as well today.
take a look at what we're seeing when it comes to trading in this part of the world. Of course, inflation numbers as well as some sort of key gauges out of Australia are expected this week as well. And that really potentially sees a bit of a halt to the rally that we've seen in the Aussie dollar. We're up, about 10% from late October until now. So that's really potentially been challenged by the data this week that could kind of push the RBA to start its loosening cycle sooner rather than later. 67.16 is what we're trading when it comes to the Aussie dollar. We've seen that really big push through when it comes to iron ore prices supporting this currency and really, other commodities currencies as well. It does help that the dollar is open, kind of mixed in that G10 space as well. Dollar yen is holding pretty steady as well. This is the picture when it comes to equities, really range bound, as Belle was saying. We are seeing Australian stocks up by just about 0.1%. We're really watching when it comes to the broader commodity story, the oil story as well. We're seeing New York crude a little bit on the back foot there, but still, as of Friday, holding that weekly gain. The tensions in the Red Sea, the Libyan disruptions, and of course we've had more of that over the weekend as well, playing into that narrative there. Let's get more on the markets. We'll bring in Bloomberg's MLive strategist Mark Cranfield there. So Mark, let me start off with US CPI, because obviously that is what Fed watchers, market watchers will be watching this week. Headline is expected to accelerate, but under the hood, that core gauge the Fed cares about is likely to show kind of the reassurance of the broader trend that they're hoping for.
Yeah, it's all about core CPI, and even more importantly is the core PCE inflation indicator, which comes out in just over 2 weeks' time. So really, it's a continuation of the story that goes back to when Jerome Powell was so dovish in December, because they saw that core PCE print come out with a one handle, 1.9%. So we expect that to influence this week's inflation data. And traders who are expecting a March rate cut from the Federal Reserve are also looking for another very soft PCE number later in the month. And they got some encouragement from last Friday's jobs numbers as well, and the ISM report. So although the non-farm payrolls number was actually slightly higher than expected, according to Bloomberg Economics, the underlying part of that jobs report was actually pretty weak, particularly because household employment numbers fell the most for almost 4 years. There's also a lot of temporary workers involved in there as well. So it's a bit of a fragile picture emerging in the employment. And then if you look at what followed with the ISM, that was a very weak set of ISM across the board, including the services sector. So that's the reason why you haven't had a big rise in bond yields, even though typically traders react pretty bearishly to a non-farm payrolls, but they didn't react very strongly on Friday. And that's because they can see that things are moving in the Fed's direction, and in March is still a possibility for a rate cut.
And then there's, of course, in Asia, we've got the Chinese inflation print in focus as well, and deflation is really the name of the game here. If we do see it still in deflationary territory, does that set us up possibly for a further leg lower for Chinese equities, or you think the worst has already been baked in at this point?
Well, every time we think the worst has been priced in, it goes lower again. So I think people are not holding their breath on that one. We've had so many disappointing situations in terms of Greater China equities, whether it's mainland or Hong Kong as well. I think the frustration for a lot of investors is that China's central bank is being relatively slow to do more easing. There's been talk for weeks and weeks that another reserve ratio cut is coming. There'll be more forms of lowering, whether it's the long-term rates or even the one-year MLF rates, and nothing really is coming through. So traders are wondering whether the central bank is seeing the urgency that they see in the weak data. So as long as that continues, as long as we get the situation where the authorities are holding back, where they're taking a slow approach to things and not showing their concern, investors will shun China. They will look to other places. So it's quite possible that equities will stay under pressure for a while yet.
That was Bloomberg's MLive strategist Mark Cranfield there. And let's shift now to what's been another major theme for us this morning. Airlines worldwide beginning grounding Boeing 737 MAX 9. That's after a section of fuselage on a brand new Alaska Airlines jet blew out during a flight on Friday. It's the most serious in a string of recent quality lapses, putting the plane maker's 2024 comeback plan in question. Joining us now is our Asia transport reporter, Danny Lee. So, Danny, we know we're going to be getting some sort of readout or presser from the National Transportation Safety Board later this morning. But how exactly have we seen airlines and regulators reacting so far?
Right, Alaska Airlines, they're the second biggest operator of this 737 MAX 9 jet. They grounded all of their aircraft. That was followed by United Airlines, who is the biggest operator. They operate 79 of them. We also then had the rest of the operators, which is still only a handful, from Aeromexico to Panama's Copper Airlines and Turkish Airlines as well. We don't necessarily have any airlines in this part of the world, in Asia, who are affected by this grounding specifically, because it's still a fairly new produced aircraft and a limited amount of operators. But meanwhile, we've seen the regulators react, particularly the FAA, that's come out with a most recent statement only a couple of hours ago. They've said that they are not going to see this plane back onto skies until they deem it to be safe. So that's one new line from the FAA. But they instruct this grounding worldwide. 171 of 215 aircraft, MAX aircraft, are affected. But we've seen the likes of India, China, the European Union and the UK coming out to acknowledge this FAA directive as such. But neither of these big major aviation jurisdictions have MAX jets, the Dash 9, in service.
The question, I guess, Danny, is how do customers feel about this, right? It's been a difficult few years for the MAX. The comeback plan was grand for 2024. They're in the middle of a transition year internally as well, right, in terms of the leadership. So how does this potentially jeopardize all of that?
It's a really good question. We've not heard anything publicly from Dave Calhoun, the leader of Boeing. But what we can see is that this is another reputational hit for the US plane maker, particularly after the global grounding in 2019 of the MAX aircraft globally. We also seen in recent times, in recent months, we've had a spate of manufacturing and quality control concerns that have impacted Boeing, chiefly with its main supplier, Spirit Aerosystems, who build this fuselage. We've not heard from Spirit, in fact, and still be waiting to hear in case they say anything more on this. But for the airlines who are going to take a financial hit, particularly from the grounding, which we don't know now how long this is going to last clearly, and especially the FAA, who will be deliberating with the airlines what kind of fixes they need and any other checks that they need.
Our Asia Transport reporter Danny Lee there with the latest on Boeing as we continue to watch for the fallout, of course, for both Boeing and Alaskan Airlines, which is seen to be obviously most impacted. This is a picture as we see trading in airline stocks across the region. Korean Air is down by about 0.4%. We're seeing Jeju Air being more significantly impacted there. Qantas, on the other hand, actually trading in the opposite direction. A little bit of weakness when it comes to Air New Zealand there as well. This, as we see that Boeing MAX grounding now going global. This is Bloomberg. Well, economic data out this week offering the first major glimpses into the health of China's economy going into the end of 2023, and the outlook for 2024 may not be that encouraging. Bloomberg Economics expecting price data showing a third month of outright deflation. Soft trade credit figures will also underline how weak demand is. Well, the annual UBS Greater China Conference begins in Shanghai today, the bank's first fully in-person event since the pandemic. It brings together top business leaders and investors to discuss the key opportunities and challenges facing the region. Joining us exclusively from the event is Eugene Tian, who's the China country head at UBS. He's also the chairman of his venture, UBS Securities. Eugene, great to have you with us, and great to see events like this taking place in person in Shanghai as we get into kind of the next phase of the recovery for the Chinese economy post-COVID. With so much uncertainty and so much concern over the structural nature of this slowdown, I am curious, what are you hearing from clients, and what's the messaging from UBS when it comes to the China market?
Well, good morning. Overall, we're hearing quite a, mildly or potential or cautiously optimistic tone, if you like, because as you said, China market did not recover as quickly, as bold as we anticipated post-pandemic. But however, since then, starting from the late part of last year, 2023, you see the high holiday season consumption numbers going up. You see the Chinese economy, broadly speaking, recovering okay in terms of the export and other things. But as you said, for the new year, there are still a lot of things, uncertainty ahead of us. But overall, we see the bright spots all over in the kind of economy on the consumption front or on some pockets of Chinese strength, such as the EV and other related industry kind of export sector area. I think overall the government still has a lot of tools in their toolbox. So a lot of new measures and potential stimulus packages are being considered, as we understand. So more things will happen, and with all that, we see Chinese market will recover gradually, but certainly could potentially solidly in the new year.
Eugene, when you talk to clients at this point, what are they most concerned about when it comes to the outlook for China? Is it sort of how we're seeing the stock market performing? Is it policy uncertainty? Is it the property sector?
Right now, it's probably the market is saying there are some bright spots in the economy. However, the government can and could potentially do more. As I said, a lot of things seems to be a lot of cards on the table for government to consider, and new policies are being rolled out as we speak, right, every week or every month. So I think the market is waiting for that level of confidence to come back. And I think, as I said, the right ingredients, the right bright spots in the certain sectors in the economy, such as China EV, not only export has set a record high, but China domestic consumption of the EV is already leading the whole world. And that trend will continue for the next several years or even decades to come. So I think all eyes on kind of macro policy front. Could it be more encouraging or stimulus package? And overall things are waiting for the whole new economy, the confidence are on the verge of coming back. I think the recovery is already happening.
Yeah, it's interesting, Eugene, because we've seen or heard President Xi emphasizing multiple times this so-called high-quality development. The sort of confusion for investors is we're really not totally clear on what that means. What exactly are you thinking that means, and how are you investing or guiding clients to invest off the back of that?
Well, we are in the business of identifying those, new opportunities or attractive opportunity, investment opportunities for our clients, right? It's interesting. You raised a very good question. The so-called high-quality growth, I think, number one, it means we are not pursuing the high single-digit, certainly not the double-digit type of GDP growth. So hopefully, a 5%, like 5.2%, seems to be the consensus for the last year growth. And this year, we believe could soften further to about a mid 4%, so 4.5, 4.4% growth. However, with a much bigger base, and when you look through the numbers, the quality of the growth, i.e., is it the new sectors that are growing, leading the growth, no longer the kind of old property or manufacturing, traditional sense of manufacturing, but also more of the EV sector, the new economy, new energy sector, and consumption leading the new type of growth. So all this means quality rather than quantity, and also the higher quality in terms of coming in with more international capital being attracted, and then the Chinese capital and Chinese company going outside to further seek a global growth opportunities. So I think that's what seems to be suggested as a part of the contents of the higher quality growth or high quality development for China.
Do you think the policy direction is clear enough, though? Because so far we've seen a lot of international capital continuing to stick on the sidelines. Do we need to see more spelled out to really tempt investors back in? Because it's still those concerns really around geopolitics, around the property sector that are weighing.
Well, I guess it's a good question, but we're at the beginning of a new year, right? So a lot of things are yet to happen as time, kind of goes on. But we already seen at the year-end economic conference that held in Beijing in December, and also early on the whole 5-year, once every 5 years, the Central Financial Work Conference. All this pointing to the new direction, as you pointed earlier, Annabelle, that the high growth, high quality growth. So we're seeing a lot more new policy being considered. More will be rolled out as the time goes by. We already seen potentially investor will come back. The domestic investors already gearing up. I think confidence at this moment is the key, but seems to be coming back. Let's give it a little bit more time.
In terms of gauging confidence in the China market, so what are your plans when it comes to hiring, headcount, and where are you seeing the pressures?
Well, I think for UBS first, we still see China as a key, globally speaking, a key strategic market for us. And we are expanding. We always lead the international banks in terms of the leading local presence in investment banking, wealth management, and asset management. But we want to do more. Particularly, we want to expand the onshore wealth and asset management platforms. As you know, in China, it takes years to develop where we are. It took us over 3 decades. And I think our clients and many of our peers are doing the same thing, although it may be more considerate and maybe more careful, but overall direction-wise, I think China remains the second largest economy, and even at the GDP growth 4.5% to 5%, it still contributes a third of the global GDP growth every year, and this can be true for the next decade or longer. So all this pointing to a more positive picture when people or companies consider into expansion or not into this market.
Eugene, we've done a lot of reporting into the significant and pretty unprecedented type of ring fencing that we've seen from American and European banks that have operations in China to try and get ahead of, or at least give themselves protection from the growing geopolitical and regulatory risks of operating in the country, right? Is that something that UBS is dealing with, and what's your strategy there in Greater China, given that we've seen, things like internally housing data, ring fencing and providing internal controls separate from the rest of the business?
Well, it's a good question. We always apply the top, most strict, stringent global standards when it comes to risk to any market. China is no exception to that from the UBS group level. And as you know, we are consolidating the Credit Suisse operation in China, or also for the rest of APAC or Greater China, and we're making very good progress with that. With the combination with CS largely completed, certainly in this market, say by the end of this year or slightly later in 2025, we'll be well positioned to capture the future opportunities. So it comes to the capital ring-fencing order. It's not happening in UBS per se, but we are managing the local business very closely, and we're definitely, as I said earlier, expanding as to the market where our clients want us to be, and we have been providing the unrivaled service, both for international capital into China and also for Chinese capital, Chinese corporate and investors to go abroad. That context, we have signed a memorandum of understanding of a strategic collaboration with China's largest bank, ICBC, late part of last year. And with that kind of a strategic partnership, we believe we will bring a partnership into play to serve our global clients and also Chinese clients better in the new years to come.
Eugene, are you still as bullish on China?
I think, Heidi,
Sorry,
the other layer of complexity that we also need to get to is UBS that's yet to merge Credit Suisse's entities inside China, because we know that Credit Suisse is trying to find a buyer for its securities business in the country, because it's already got, or UBS already has one in the country. It can't hold 2 licenses for the same business. So, Eugene, can you give us an update on that asset sale, where you're at in this point in time?
Well, you're right. In China, you're not supposed to control 2 licensed securities firms. Certainly, license regulation requirements is such. So we are already reviewing the options for Credit Suisse securities. It will take some time for us to resolve that. But in the meantime, we are engaged in a very active and very positive dialogue with Chinese regulators. So we're making good progress on that. Broadly speaking, Credit Suisse has brought to UBS platform some number of good quality bankers. So we strengthen our team locally and certainly bring a lot of capabilities. And geographically speaking, there's a lot of a complementary nature, as you know, across Asia-Pac. But in China, I think we see more of added on benefits so that UBS in a new form can serve our clients better in this market where we already leading among the all international banks.
All right, Eugene, thanks for your time. That was the China country head at UBS, and we'll have plenty more ahead from the Greater China Conference in the coming hours. Stay tuned for conversations with the bank's head of China Global Markets, Thomas Fung, and former US Secretary or Treasury Secretary Larry Summers at the time that indicated on your screens there. Plenty more ahead. This is Bloomberg. South Korea's regulator is launching a wider investigation into local banks and brokers which sold exotic notes linked to Chinese stocks. That's over concerns the securities may saddle investors with heavy losses. Let's get more from our Asia stocks reporter Yu-Kyung Lee. And Yu-Kyung, I think the question is how serious are these losses going to be from those complex notes that were sold to a lot of people that are really, if not already in retirement age, entering retirement?
Hi, good morning. Yes, so this is a pretty serious case for South Korea. So we're looking at about like 15 trillion won, or almost 12 billion US dollar of worth of these products maturing, and as much as like maybe like probably half of those outstanding balance may be lost to maybe hit as a loss to the retail investors who bought this high risk, complicated structured notes called equity linked securities. Typically, these products are sold with 3-year maturity. So when they were sold in 2021, Hang Seng China Enterprises Index was trading above 12,000. Now the index has crashed almost 50% from that 2021 peak. So the retail investors who bought this product at the time are looking at about 50% of their loss on their principal. So all these combined, authorities are really concerned that these retail investors may be saddled with heavy losses. So they are launching an investigation into 12 financial institutions in South Korea that sold these products. And the top governor at the Financial Supervisory Service said it looks like that they may have not done adequate explanation to retail investors when they sold these products.
Is there any indications of mis-selling products?
So that will be the key topic for the financial regulator and the financial watchdog when they do the investigation. But it looks like that during the 2 months inspection that FSS has done, it looks like there has been some kinds of incentive structures that encourage banks and brokerages to aggressively sell these products to retail investors. So there may be the case.
Our Asia stocks reporter Yu-Kyung Lee there. More ahead here on Daybreak Asia. This is Bloomberg.
The jobs report was absolutely hotter across the board.
It's a solid report.
The labor market is still quite strong.
Of course, we're concerned about what does this mean for the Fed.
This reinforces the notion that the Fed's not going to be in a rush to cut rates.
Certainly, taking back rate cuts is a relatively easy call.
Very initial interpretation is, well, that likely means that the Fed does not actually cut rates, but I think that's a premature conclusion.
I'm actually still expecting a 50 basis point cut in March.
Easing going to happen in March? I don't think so.
I think it's really clear that the Fed is going to be waiting a while before it starts cutting rates.
I think they'll start cutting in May, June.
I think you're looking at the back end of the year for that.
Bloomberg TV guests there weighing in on the latest US jobs data, the mixed picture and the implications for Fed policy. This, of course, as we hurtle into that key inflation print from the US this week, and it will be that reading stripping out, of course, volatile fuel and food prices that the Fed will really be focusing on when it comes to whether it is kind of steady as she goes and does it feed into that narrative that inflation continues to come down. That is the expectation when it comes to that underlying reading. This is a picture as we take a look at what is really kind of a treading water start to the week, right? We're seeing a little bit of upside there when it comes to the cost be up by high, just about 0.1% there. We're seeing Australian stocks really barely changed in the first hour and a half of trading this Monday morning. Contracts in Hong Kong also pointing to a bit of a flat start as well. Of course, there's the absence of Japanese markets and thin on liquidity as a result of that, with Japan closed for a holiday. The dollar has been holding pretty steady. All of this, of course, could change when it comes to the geopolitical risks that we're facing this year, particularly when it comes to just an intense number of elections being held across 2024. And we kick it off with Taiwan, where voters will be headed to the polls to choose their next president this coming weekend. It's an election that will shape US-China relations for years to come. 3 candidates are vying for the top job. Governments and investors will be watching closely for that result, for any trigger in instability in the Taiwan Strait. Joining us now from Taipei is our Chief North Asia correspondent, Stephen Engel. And Steve, of course, high stakes and the issue of policy towards Beijing, Beijing's policy towards Taiwan, which we see playing out on a day-to-day basis, has been front and center in this campaign.
Yeah, I think you're going to see every story that crosses the Bloomberg terminal that is has to do with China and Taiwan will be amplified, because we're in the final home stretch, if you will, before that election on Saturday. Many saying probably the most critical election Taiwan has seen in decades. So we are, looking at the 3 main parties, because keep in mind there are 3 main candidates for president, for the DPP, for the KMT, and the TPP. So it'll be very interesting to see how the votes shake out. And last night, you can kind of see that. I don't know if you can see the crowds on the front page of the Liberty Times, essentially saying yesterday was Super Sunday, with the main parties all having large rallies. And of course, there'll be individual rallies all the rest of this week throughout Taiwan. We will be at some of them in the opening days of this week, ahead of what's going to culminate on Saturday. And that is, of course, the election and big rallies here in Taipei on Friday night. But again, as I said at the top, a lot of different stories are going to get amplified because of what's at stake on Saturday. And again, there's been numerous reports, of course, of balloons being floated across, mainland Chinese balloons being floated across the Taiwan Strait, at least 12 of them crossing the middle line of the Taiwan Strait. Some of them, according to Taiwan defense officials, saying actually crossed over the island. Beijing, at least what we're hearing from Beijing, is that they're saying they're weather balloons. But again, after what we saw a year or so ago in the United States, when the U.S. shot down a surveillance balloon, there's lots of speculation that these were indeed surveillance balloons, as Beijing perhaps reportedly amps up its influence on the outcome of this election. It also comes at a time we're hearing that Beijing has sanctioned at least 5 U.S. defense companies. After mid-December, we heard the Pentagon and the State Department approving some $300 million in foreign military aid, potentially to Taiwan. So again, the war of retaliation has begun there.
It's interesting, though, when you think about the war of retaliation, Steve, given what we've also had from U.S. intelligence, and they're saying that perhaps given the high levels of corruption inside the Chinese military, its own campaign or possible plans, of course, very possible there, but possible plans of invasion into places like Taiwan could be facing a significant setback.
Yeah, this is a very interesting story coming from sources, again, not confirmed by Beijing, not confirmed necessarily by, at least outwardly, by U.S. officials, but some of these, investigations indicating that that purge that Xi Jinping launched of the PLA, the People's Liberation Army, that, of course, toppled the top man, the defense minister, as well as the top general, Li Shangfu, last year. At the time, we were talking about perhaps some, improprieties about requisitioning and, some equipment purchases in the Chinese military. Now we're hearing from sources that have not necessarily been confirmed, but Bloomberg Scoop essentially saying that corruption has reached across all levels of the PLA rocket group, as well as the defense industrial base, to the point where even some rockets were reportedly filled with water instead of fuel. Some of the missile lids out on the western side of China did not operate properly. Again, it is based on sources, but it does indicate that any potential military action, whether it's in Taiwan or elsewhere, by the PLA has been hindered by rampant corruption, reportedly, again, from sources telling Bloomberg News.
Yeah, just some extraordinary details in that reporting. But, you know, Steve, does it sort of, I guess, add to the idea that with all of the domestic challenges, with the economy clearly a corruption drive that's still ongoing, that Xi Jinping does not necessarily need these external kind of challenges in this year? Or I guess you can flip it and say, well, in a time like this, maybe there is an inclination for a flex of national might for maybe a more hawkish Beijing.
Well, that's what's going to be likely center of voters' minds on Saturday. These elections, the presidential elections here, are oftentimes tied to the sentiment of cross-strait relations. The DPP of the incumbent party of the current president, you know, essentially with its platform provokes China because they have a de facto independent stance, whereas the two, you know, opposition parties, the TPP and the KMT, would like to see more engagement. So that's why this election is probably key as far as shaping Taiwan-China relations. Now, if the DPP is re-elected for a third consecutive term after Tsai Ing-wen, Lai Ching-te is the candidate, the vice president. The pundits are all saying that the likelihood of more Beijing overt would you say intimidation is more likely going forward for at least the next 4 years?
All right, that was Bloomberg's chief North Asia correspondent Stephen Engel in Taipei for us across the course of this weekend. Stay tuned for more coverage from Bloomberg of Taiwan's elections. We'll have live updates from Steve and our team every day ahead of Saturday's vote, and then full coverage and analysis of the results from Monday, January 15th. Let's also keep an eye on other political stories that we're tracking this hour. So U.S. congressional leaders have announced a deal on a top-line spending level for the current fiscal year. That lessens the chances of a partial government shutdown on January 20. Senate Majority Leader Chuck Schumer and House Speaker Mike Johnson negotiated the bipartisan deal. It clears the way for committees to push through detailed spending bills now that they have a limit on the amount that they can spend. Indonesia's presidential contenders sparred on policy issues from foreign debt risks to disputes in the South China Sea in the latest debate ahead of Friday's election. The former Jakarta governor Anies Baswedan accused Defense Minister Prabowo of not doing enough on cyber defense. Prabowo, who leads some opinion polls, labeled his competitor as too theoretical. A new opinion poll suggests most Thais expect the country's political turmoil to persist through the year. Yet a majority also see Prime Minister Srettha Thavisin staying in office. The government poll was conducted by phone in mid-December, and it found almost 30% predict political discord will get worse after last May's election ending 10 years of military rule. The Bangladeshi Prime Minister Sheikh Hasina is extending her rule after her party won Sunday's elections. As a result, she'll retain her title as the world's longest-serving head of government. The Election Commission says turnout was around 40%. That's a sharp drop from 80% participation in 2018, as voters heeded an opposition campaign to boycott the election.
Another story we're following, Saudi Arabia is cutting its crude prices for buyers in all regions for February amid persistent weakness in the market. Aramco will be selling its flagship Arab Light to Asia at $1.50 above the benchmark. That's down from the previous $2 markup. It's also cutting prices to Northwest Europe, the Mediterranean and North America. Still to come here on Daybreak, we're looking ahead to this week's Consumer Electronics Show in Las Vegas. The CTA President and CEO, Gary Shapiro, will be with us next. This is Bloomberg.
Just taking a quick look at how markets are faring so far in the session, and you can see pretty muted moves so far. I think if you were to take one key theme away from the session so far, it's range-bound, because we're not seeing too much movement in either direction, really. Standing out, of course, is how investors are going to be passing those key numbers from Friday. The jobs report are pretty robust at the headline level, but cracks certainly forming underneath the surface. And that takes us ahead, of course, to the U.S. inflation print that's due to Thursday of this week. And when you take a look at the reading, stripping out food, stripping out energy prices, again, it could show us that price pressures are moderating. Now, lower rates environment, that is pretty positive for tech stocks in general. And you're seeing the tech index there just fractionally higher. But a huge event, of course, for the global tech industry is taking place this week. The annual Consumer Electronics Show begins Tuesday in Las Vegas. It's one of the biggest annual showcases of new products and technologies. Now, the Consumer Technology Association hosts the event, and its president and CEO, Gary Shapiro, joins us now. So, Gary, thanks very much for taking this time to speak with us from the event. Huge number of exhibitors, huge number of attendees as well. What are you most excited about?
Thank you for having me. You know, the CES begins each year with excitement and optimism, but this year is really special. We have more innovative products than I've ever seen. We had a record number of submissions, up 30% for our Innovations Awards. We have over 4,000 exhibitors in over 2.5 million, that's million, net square feet of exhibit space. No one can see the entire event. It's by far the biggest business event in the world, frankly. It's the biggest innovation event. It attracts more people from outside the United States into the United States than any other event, including sporting events. And this is a very big event. And it's focused heavily on artificial intelligence, especially generative AI. That is the buzz that we're seeing out there. And certainly we're seeing so many other creative approaches to marketing, to entertainment, to technology, to content creation, to mobility, to healthcare with technology, as well as smart homes.
I'm interested in AI because I think that, yeah, it was also the story of 2023, and we saw so many investors really buoyed by that optimism around the technology. But there is that pressure that's really building now for companies to demonstrate that it can substantially boost bottom lines. Are we likely to see anything on that front at the event?
Absolutely. I mean, what's changed from last year is generative AI through ChatGPT had just been introduced. And now companies have had over a year to figure it out and play with it and figure out how they can incorporate that. And certainly many companies are using it in their business processes to create content, whether it's marketing or internal correspondence or even headlines in journalism. But there's also now a shift to the consumer marketplace. There's a shift to business product offerings. About 30 to 40% of our event is business to business. We see a lot of major industrial companies with huge presence at CES. But artificial intelligence is something that we've been using for years to fly airplanes, to get us around. It's used in active collision avoidance and passive in cars. And certainly it's used in smart loudspeakers. But now with this ability of machine learning, the ability to learn and to generate new ideas is a new thing. And I think it's almost as fundamental as the internet itself. And it will allow us as human beings to live in a world that's better in terms of safety, in terms of better health, with very specific diagnoses and treatments based on historic fact, and also to be better creativity and get rid of some jobs which are very mundane and repetitive and go into new areas and new jobs and new things which will benefit all of mankind.
I'm interested in as well there's AI products, of course, there's AI washing. Are you concerned about any businesses that sort of can make perhaps unfounded claims around AI as well?
Well, I think the marketplace for any reputable company, especially with a brand, is a great way of figuring out what is true and what is not. It's a competitive environment out there, but consumers have a new gift they've had for 10 or 20 years now, and that is the ability to write comments on websites about companies. So any company with a brand name is so interested in protecting it, they're going to be very cautious about promising things that they cannot deliver. And we're going to see that more and more. But of course, there'll be the unscrupulous trying to make a quick buck. We see that with robocalls. We see that with other uses of deception. And I think governments around the world are working to rein that in. But, fraudsters have been around since beginning of mankind. And I think the artificial intelligence will be one of the things will be the tool in fighting fraud and fighting people who make false claims. So I'm not that concerned about it. I think that the government has a role of creating guardrails so businesses know what is legal and what is not. But certainly sometimes pushing the envelope in claims is something people do, companies do, but they do it at risk to their brand.
Another big key trend of this year's show and something that AI plays into is car technology. So what are you expecting in this space?
You know, there's so much. That's one of the fastest growing areas of CES. There's some 300 exhibitors just focused on mobility and another 200 that have products in their booths that are relevant to that they've specified. So it makes us the largest car show, if you will, in the world. But it's not only cars, it's all forms of mobility. I mean, there's plenty of electric car companies, obviously, and charging companies. And part of that infrastructure, there's a lot focused on self-driving because that will certainly empower people with disabilities and older people and cut down on millions of deaths and injuries each year. But we also have other forms of mobility, whether it's the agriculture environment with a number of companies that provide solutions for saving fertilizer, water, and seed, as well as going 24 hours a day using the internet, plus individual mobility solutions, including flying drones, flying cars, as well as electric scooters, electric bicycles. You name it, if you can get around with it, it's at CES.
Just quickly, Gary, I'm interested as well, given that there are a number of government officials that are going to be attending these events, what kind of conversations are you going to be wanting to have with them? And what sort of message do you want to send as well, given that the US is yet to put anything in formal legislation?
Well, certainly we have over 1,000 different people speaking on conference sessions. Several of those are focused on policy sessions. The United States is definitely behind in terms of a national strategy on self-driving and on artificial intelligence with one national privacy law. That's put us at a disadvantage compared to much of Europe and Asia, which have national strategies. The U.S., of course, is a very innovative country, but we push back. We present both sides of an issue. We allow our opponents to speak as well. But the thing is that we cannot view in the United States that our focus on innovation and our success, where government has not made new innovation products illegal, is not our manifest destiny. Certainly in China, for example, with artificial intelligence, they'll have enormous data sets, very little focus on privacy, millions of engineers. That's a strong competitive advantage. Europe, though, is focused on privacy in a way which is overly restricted to innovation. We want to be like Goldilocks and the Three Bears and get it just right.
All right, Gary, thanks very much. Good luck for the event this week as well. That was Gary Shapiro, President and CEO of the Consumer Technology Association. Coming up, we'll look ahead to Asia's earnings season, including Samsung, which is set to benefit from AI demand. That's next. This is Bloomberg. Well, busy week for earnings in Asia. We've got the reporting season kicking off, and the major names, well, you can see some of them here, but chief among them were Samsung, and then also Indian names as well, Wipro, Infosys, HCL Tech. Let's get more on the outlook now, because we have our Bloomberg reporter Rachel Yeo joining us. Rachel, yeah, we just saw Samsung there. It's the preliminary numbers that are due tomorrow, and it is really that focus on AI for the company as well.
Yeah, so for Samsung, they are reporting fourth quarter earnings, and we are expecting to see steady revenue on that front. The reasons for this is that we are probably seeing higher average selling prices for DRAM, and while bit shipments for DRAM may also be growing as well. And in terms of NAND, we may probably see increased sales as well, although average selling prices for that still remain weaker. Some analysts also say that there might be some slight margin pressure on smartphones due to reasons like rising marketing costs. Mm-hmm. Yeah, so in terms of AI, we can also see that Samsung is leaning into AI a lot, and it's also the key for them to unlocking greater sales this year. So in the past few years, Samsung and other mobile phone makers have traditionally relied on improvements in camera technology and flexible displays to try to stand out. But it seems that 2024 has promises for them to take AI into the center stage this year. Yeah.
we've seen India continue to be really kind of the market darling, not least of which are the IT companies. Are we going to get a bit of a reality check given the valuations that we're seeing right now?
I'm not too sure about India earnings, but in terms of Samsung, it's still going to, like AI and all that is going to drive to the forefront for this year. So, yeah, Samsung has also reportedly targeted an 11.5 trillion won in the chip business in 2024, thanks to the revived chip demand in AI and increase in DRAM prices as well.
Our breaking news reporter, Rachel Yeo there. Let's take a look at some of the stocks that we're watching as we get into that market open in Hong Kong and mainland China. And developers will be in focus. China's central bank and the nation's financial regulator vowing to boost credit support for the construction of rental homes as we see this property slowdown continue to play out. And keep an eye on these defense-related stocks as well. China's boosted military maneuvers in the South China Sea after the US and Philippines mounted their own maritime drills in the contested area. And of course, Belle, that's before we get to that Bloomberg scoop questioning the capabilities of China's, the modernization efforts of China's military in light of the US intelligence reports.
Yeah, that's right. Some really incredible insights coming out of that Bloomberg story, and sources as well saying it could really set back any sort of plans for major military action from China. But certainly the market dynamic today, you're looking fairly range-bound so far, not too much movement in either direction, though the story is really looking ahead to those key US inflation prints this week. But what else we've got coming up is plenty more from the UBS Greater China Conference in the coming hours, so stay tuned for those conversations ahead. This is Bloomberg.